Welcome to Paint Ed. PCA provides painting contractors with connections they need to grow their business. To find out more and to become a member, visit pcapainted.org. Find more great content just like this on PCA Overdrive. A subscription to the platform is included with membership. For all you non-members out there, sign up for a free trial. PCA Overdrive is available on the App Store and Google Play. This episode is brought to you by Benjamin Moore and Sherwin-Williams.
Job costing is something that's easy to do, but it's also just as easy not to do. And it's really easy to do for a season and then to get complacent and stop doing it. And I would encourage you not to do that. I would encourage you to make sure that this becomes something that you do for the rest of time. Welcome back to another episode of the Elite Business Advice Podcast. My name is Chris Moore, the founder of Elite Business Advisors, your host here for the podcast. I'm doing it today. This is my favorite topic in the whole world. If you've been listening for the last 244 episodes, you probably know what I'm going to talk about. If you haven't been along for that journey and heard my favorite topic in the world, that's okay. It's okay. We're going to talk about job costing. And I'm not going to invite my friends on here, or I'm not going to bring my favorite guest on this topic, which is Bracken with Busy Busy. We just did an episode with her out in San Diego live right by the beach. If you missed that at the end of season 5, go back and check that out. But I'll talk about them kind of later on. But it's just going to be me and you. And I didn't want to bring my people on here because I didn't want you to think we were badgering you. Because if you don't job cost, we'll talk about why I think you should. And if you do job cost, number one, thank you. But I'll also share some additional thoughts on how you can use this data even better, what you should be doing with it. Maybe you're doing it, just not super thorough, or you're loosely doing it. So I just want to kind of hit all the bases here. And I don't want you to think, again, I was ganging up on you. But if you've missed the last 2 weeks, this is now our third episode of our Back to Basics series as we kick off this year. And I just really couldn't get myself to do this series without talking about job costing as a foundational thing for you and your business. The last 2 weeks, I talked about very tangible, tactical things for you as almost a human being, truthfully, let alone a business owner, about having a to-do list system and having honoring your calendar, which was last week's episode. And so I'm putting job costing right there because if you ask me, we need to know, how do we get stuff done? We need to have a way to honor the time to get those things done. And then the number one thing we really need to think about for our business is job costing. And I'm going to kind of share why that's important today. So I want to cover what is job costing. If you're new, if you haven't heard this term before, if you don't know why I'm so excited about it, you may never know that. That's okay. I wanted to share how you should be doing job costing, what data you should be looking at, why this is actually important. But even more important than that, how do we actually use this data to gain insight and make decisions in your business? So I'm going to hit all those angles here in this episode. I have a client meeting in 20 minutes, so you can be sure that we'll be done in 20 minutes-ish from now at the latest. So this won't be a 4-hour episode, Chris ranting about job costing and why it's important. But I do hope it helps. Thank you guys for plugging in. This is the Elite Business Advice Podcast. So doing an episode on my favorite topic, my favorite thing to talk about, my favorite thing to go on other podcasts for, my favorite thing to speak about at events like Expo coming up and everything else. I'll put a totally different spin on this at Expo. It's not going to be just about job costing. We're talking about what do professionalized companies do to get ahead financially. So job costing will play a role in that, but I love to share this. And so for the sake of you guys, I didn't really feel the need to prepare for this episode, if I'm being honest, because I could have probably got on here. I could have talked for probably about an hour and a half about job costing and all the different thoughts and ideas and things and benefits and how-tos and how, what do we do with it? And probably could have done that. But for your sake, I decided to do two things. I just mentioned one of them in the intro. I decided to record this right up against an upcoming client meeting to make sure I stay in that 25-ish minute target that we have and try to, stay within or under that. But number two, I did put some thoughts together to hopefully kind of help this flow together. Otherwise, I'm just going to get excited. I'm just going to start talking, and like an hour and 45 minutes later, you're going to wonder where we're at and how we got here. And I'd probably wonder the same thing. So because I'm a numbers nerd, because I love spreadsheets, because I think understanding your finances is so important. That's why I'm so passionate about this topic. It's not just because I'm a little bit of a nerd and I love numbers. It's because I think that job costing is one of the most important fundamental things you can and should be doing in your business. And it's something that's really easy to do. It's also really easy not to do. Right? I heard that quote once from Darren Hardy. It's one of my favorite quotes that exist out there. Job costing is something that's easy to do, but it's also just as easy not to do. And it's really easy to do for a season and then to get complacent and stop doing it. And I would encourage you not to do that. I would encourage you to make sure that this becomes something that you do for the rest of time, for forever, because it's that important. And as your business grows, even if your business, you just get to a comfortable spot. Let's say you just want 6 painters, you want to do $750K a year, you can sell it all, you can manage it all, you can admin it all. Okay, you develop a lifestyle business, you work 20 hours a week, nothing's changing, you're not adding employees, you're not adding overhead, you're just running status quo. You still need a job cost for the rest of forever, because it's going to show if things slip. And when we get complacent, bad things usually happen. Okay, so that's just kind of the why behind job costing. In my opinion, it is something you should do forever. Now, whether you are doing it or whether you're handing off that responsibility to your admin, your office manager, a VA, a project manager, whatever it is, you should trust but verify in those situations. But job costing is something that should be so simplistic, so systematic, I should say, that you can do it from anywhere. We actually is an add-on service that we'll do for some of our clients that it makes sense for them to outsource it. They don't have the capacity for it. Maybe their team doesn't have the capacity for it. And so we take care of it. But I tell everybody, like, we're happy to do that. We don't mind doing that. But at the end of the day, like, I want you to have your system so simple to job cost that we can job cost remotely from, maybe the other side of the country. We're in the middle of it, so I don't know that always works great. But Stuart's in Scotland right now before he moves here to St. Louis. So he's on the other side of the world. He could job cost for you if your systems are right. So let's talk about what is job costing. Just from a super foundational point, if this is a new term for you, job costing is understanding how much money do you make on every single project that you do. We want to know what is the gross profit dollar amount, which gross profit is what the customer pays you minus the materials that you spend to complete that job, minus the labor you pay out, whether it's in-house or subcontractors, and then what is left over. That is the gross profit of the company, right? Now from there comes overhead and other things, but as far as kind of a term that we look at, we want to know how much money are we making gross profit on each job after labor, materials. You could also throw in equipment rental. If you're doing travel work, you should include that in there, right? Your travel cost and hotel and mileage and gas and per diem and all that stuff should go in there, right? Any cost that's associated directly tied to the production of that project should go in there. Again, not counting like overhead, wages, or anything like that. Okay. Job costing will, if you have the right spreadsheet, and by the way, our job costing sheet is something that we are happy to give away for forever. We have a very simplistic one that we give away because it's that important. I believe in it that much that I will give that away for forever. So shoot me an email, chris@elitebusinessadvisors.com. I'm happy to send a copy of it. Just let me know that you heard this on the podcast and just ask for it. I'm happy to share that. You can shoot us a DM here on our social platforms as well. But in that spreadsheet, we have it set up to where it will also show you what your margins are. And what I mean by margins is what percentage of each of these categories in relation to the overall revenue. So what was your gross profit margin? We want here in the painting industry, especially the repaint industry, part of this, we want that to be 45% or greater. If you're on an all sub model, 40% is not a bad target. We want our clients to be a little bit overachievers, so we shoot for 50% and then even 45% even on the sub model. But that should be what you want to target, right? That or greater. If you're doing higher than that, fantastic. We have some clients, even at the $2, $3, $4 million stage, that are at a 60% gross margin right now. And I love that for them. So it'll also show you your labor margin. So what percentage of your pay went out to labor? If you're on the in-house model, that should be 40% or less. We really want to shoot for closer to 35%. And if you're on the in-house employee W-2, this should include employer taxes paid on top of their wages. And not necessarily the insurance part of it. I consider that kind of a monthly expense. There's a couple of certain situations where I might look at that otherwise, but for the most part, I include workers' comp and liability as just our monthly overhead. But we do want to include employer taxes on that labor. We also want to see what our material margins are. Material margins are going to be, what, again, cost of paint and supplies in relation to the job. We want that at 15% or less. We have seen that 15% is a little bit more of a norm. The norm used to be 10 to 12% up until about 2020, 2021. As inflation's happened, prices have gone up. What we found is that the most painters haven't raised their prices in proportion to what the raise in materials. So we're seeing materials a little bit closer to 15% now than we used to, and that's okay. That's always kind of been the industry top that we want it to be at. So understanding the job costing will show us per job all of these numbers, and knowing what the target should be to where you can see, hey, if I'm ahead of that, if I'm behind that, I'm on track, I'm off track, I need to look at this, I need to dive in a little bit more. So that's what job costing is. Now, one question we get asked a lot, I just had to include this here, is when should you do it? In my opinion, you should do this after every project is completed. If you are a larger company that's closing out, I'm going to say maybe 5 to 10 jobs a week, maybe anything over 4, I don't know, kind of up to you. But if you're closing out a lot of jobs or, more than that, I don't hate you kind of batching this together, because it might not be realistic to do it every single day, or it may not make sense to do it every single day. By the time you get in, Sherwin-Williams to look at your PO reports and to get this, it might actually make sense to just do this once a week or twice a week. And again, it should be part of the rhythm we talked about in that first episode of this Back to Basics series, that, you, your office manager, whoever, on Mondays or Wednesdays or Fridays or whatever days you want to assign that task, you go in and do your job costing, and it's actually a lot more efficient to just do 5 to 10 of them at once. Now, if you're only turning over 5 to 10 projects a month, you should still be doing this after every project, right? I'm just saying if you're doing a lot of projects each week, kind of batching this together will probably increase the efficiency. We find that when we do that for our clients, we create a weekly cadence with it where we can go in, get into everything at once, do the costing, get it caught up, and then revisit it a week later and just do it all at one time. So I already kind of talked a little bit about why it's important. See, I did make notes today. But the one thing, I don't know if I hit on this hard enough. The one thing about this, why this is important for the rest of forever of time, is it creates awareness in your business. And similar to, we did a whole episode on awareness here at the very beginning of this year, this season 6. And I talked about kind of the health and fitness journey that I've been on, and the accountability that John and myself, and now AMZ Bach has jumped in on with us. We have a weekly thread, or a daily thread. We all check in with each other. How's it going? But the role that awareness plays in that health and fitness journey has been great in the last 3 weeks. I can happily say so far I'm down 6 pounds and 2.5% body fat. So again, using you guys as my extra accountability here. Check in with me at Expo, see how we're still tracking. But the awareness has been huge. And I think job costing is the same way, right? It's easy to get complacent. It's easy to not realize when bad things are happening because we're just not paying attention to it. We're not aware of it. It's not in front of our face, right? And that's where I was getting to with the food I was consuming. It wasn't that I was just always eating fast food and fried food and just terrible stuff. It was too much of it, too much fat. Fat's in so many things that I didn't realize how bad it was, right? I'm curious but scared to know how much fat I was actually taking every day, right? But it's in front of my face now. I can't hide from it. And job costing is no different from that, okay? So let's talk about, but here's what I want to leave this episode with. I got 10 minutes. I'm tracking this, I promise. I want to leave this with, what should you be looking at? Okay, so if you are job costing, nothing's been new so far. Thanks for sticking with me here. And some of you guys are drinking from a fire hose right now, and that's great too. But what should we be looking at? What are the KPIs? And then how do we use this data to make decisions in our business? Okay, so what are the numbers we should look at? Number one, In job costing, I recommend breaking it down by month. If you get a copy of our sheet, if you look at our sheet, it's broken down month by month. Okay. How much work, what jobs did we produce during the month of January? What jobs during February, what jobs during March, what jobs during April. And depending on the size of your company, we kind of put a number in there that if you have any projects that spill over between months that are, above a certain threshold, again, depending on how big your business is, we recommend splitting that up month, proportionally, right? If it was 1 week in January, 1 week in February, split the job in half, put 50% of the revenue and the expenses in January, 50% in February. And I'll explain why in a second. Because we want to be able to see during the month how much revenue, how much in dollar amount of jobs did we produce? You can tell I'm trying to squeeze this in and put a hard timeline on this. My brain's on 100 cylinders right now firing. But we want to be able to see that month by month. And here's why. You only make money in this industry when you produce work, when you produce jobs, not when you sell it. That money's not yours yet. If you break down production and revenue in this industry to a very foundational point, you only make money when work is completed. So you should be viewing your monthly profitability not on money in, money out in your QuickBooks on your profit and loss, but when you actually produce your jobs. Okay. And here's why that's important. All right. I'm recording this here at the very beginning part of the month. And let's just say you and your team finished up a job on January 29th, 28th, whatever last Friday was, right? You put that on payroll, or you paid that subcontractor. All those expenses you already paid for the paint show up in January. Homeowner was gone, and they pay you on February 2nd. So immediately your profit and loss is completely skewed because every expense occurred with that job showed up in the month of January, but none of the revenue did, and all the revenue, or maybe, minus the deposit, showed up in January, but the rest of it shows up in February. Immediately, looking at your profit and loss is essentially useless. Now, granted, I want to make sure that every month it's positive, right? There's some things that we still use profit and losses for. We want to create that awareness with your overhead and your expenses. Like there's a role that the P&L still plays in the business. But just looking at your data, just in the P&L, because of the way the cash is collected, unless you're on an accrual basis, which I personally only recommend in this industry. If you're a large commercial contractor, then it might make sense. For the most part, go cash basis, keep it simple. That's my personal philosophy. It's going to be skewed, right? And so we want to look at your job costing as how much work did we produce during this month? I want to see what was all the gross profit we made on all those jobs put together, right? Even the ones that were splitting kind of during that month per se, if you will, right? And then from there, we want to kind of take away from that, what was your monthly overhead, right? This is where I put that insurance expense. That's where you're going to put your shop and your office rental, your advertising and marketing, your meals, your gas, going to PCA, coming to the Elite Business Retreat, your travel, your tickets, everything else, right? We're going to put into that category and say, how much did we spend this month in a monthly overhead? There's another line item on there for salaries, right? Your office manager, your project manager, your estimator, your project coordinator, anybody that's in an overhead role. We want to kind of take that away from that gross profit each month. I want to put on there too the owner's comp. So, your salary and or your distributions, depending on if you're an S corporation or not. Not going there on this episode. It's another favorite topic of mine because of tax savings. And then, your tax and your profit savings. We encourage you to be proactive in saving money to pay your estimated quarterly payments, your end of the year tax bill. For people that are doing well financially in their business, we do something added called the profit account, where we put a percentage of revenue aside into that and do some quarterly bonuses to them as an owner, just kind of another systematic way of sharing in, the wealth of the business and having a system behind it. And that leaves you with how much money did the business make this month? Okay. The target that we look at for that is if you're at 10% of whatever the revenue was you produced is that monthly cash flow, you're healthy. You're good. Okay. 5 to 10%. We got it shaded yellow on our profit sheet. 10% or greater, great. 15%, amazing. Right. And so essentially with that monthly cash flow. This becomes your monthly financial statement. This is, hey, this is the work we actually produced. This is how profitable we were. Yes, we need to collect the cash. Yes, we need to collect the payments. We need to make sure the cash flow is good day to day. There's that piece of it that I'm not going to say doesn't exist. But to me, you have a 100% perfect measurement based on your job costing of how financially healthy was your business. And guess what? I am happy to sit here and say that at the end of every single month, I go through and I do our job costing essentially. It's a little different terminology and how we run things here. I hate it because I can't do it during the month because everything is month by month from us. All the client income we have that comes in at different points of the month. All of our expenses occur at different points of the month. So at the end of every month, usually literally first or second, I had this done literally the first of the month this month. I knew exactly how much money we made. I looked at it on exactly the same basis I'm talking about. We had a couple of things that we needed to bill for that we didn't send out, but we did the work in January, so I put it in January, okay? So with that being said, understanding that monthly cash flow gives you the data to make powerful decisions in your business. Maybe it is, hey, we're thinking of hiring an office person. We know their salary is going to be, let's just call it $5,000 a month after employer taxes. And again, I'm throwing a number out there. If your cash flow every month is $5,000 or greater, you know that, like, if nothing else, it's kind of a no-brainer. Like, hey, we can absorb this cost, and even if it doesn't return anything extra for us, like, we're good, right? Worst case, we just go from profitable to break even a couple of months, right? But if you have a big enough cash cushion, you're good on that decision. But if you see that, hey, some months we're up $5,000, some months we're down $5,000, and some months we're net zero, and like you're all over the place, we know that this is a little bit of a riskier hire, and that we need to make sure it pays for itself, right? Same conversation with adding overhead. And I get people that are like, can I afford this marketing company? Can I afford this new shop that we need to upgrade into as we've grown our business? And when we have a healthy amount of months of data with this net cash flow metric, I can pretty confidently tell them, like, hey, yes, we look at that, we look at their cash cushion, and we make a decision from there because we have tangible data, not feelings that we talk about, okay? Some other things you can do with this data. Your margins will show you your weaknesses. They will force you to have a conversation with yourself or with your production team and say, was this a production problem or was this an estimating problem, right? You'll see on our job costing sheet, if you want a copy of it, that we have a column for estimated hours versus actual hours. How much did we estimate this project to take, plus or minus change orders that occurred? What did we actually pay out? How many hours did we actually pay out? What's the difference in that, okay? That will help you dive in a little bit deeper and say, wow, we were 30 hours over. Our margin was 49% for labor, not good. Okay, did I misestimate something? Did our production team mess up, right? It kind of starts to dive into those things a little bit more. You can understand where your weaknesses are when you're estimating and such forth. So there's a lot of things that you can use job costing for. But number one, awareness. Number two, makes bigger decisions in your business. It shows you the trend. If your goal is, hey, our cash cushion right now is $25,000 and I want to get that to 100 by the end of the year, great. That means you need to cash flow X amount of dollars per month, and you can kind of set a goal. And if you look at your history, you can say, yeah, we're on track for that, or we really got to make some big changes and growth. So I want to leave you with this quote because I have a client meeting to hop on with my good friend Todd Schultz. Nick Slavic, I think it was last week's quote with a Nick Slavic quote, and we're just gonna call this the Nick Slavic series apparently. But one of my favorite quotes when it comes to job costing and why it's so important, and somebody asked Nick this one time, and he said this. He said, job costing leads you down a path of 18 more questions about your business. And that's why, to me, and Nick believes this too, that this is such a foundational thing in your business, because it's going to help you uncover those weaknesses. It's going to help you ask questions. It's going to show you where to dive in deeper, to figure out where the problem lies, to make changes, to make improvements about your business. If you don't like that net cash flow number, you have three options. You can do more revenue per month, you can increase your gross profit margin, or you can decrease all those things in those line items I talked about between your overhead, your salaries, and how much you pay yourself. I don't know about you, but I usually go for one of the first two. My first recommendation is, unless there's bad spending, it's not to cut expenses, it's not to pay yourself less, it's figure out how to increase your margins or do more revenue, right? And so job costing gives you that awareness. but it also empowers you to be in control of your destiny if you don't like the results you're getting. Thanks for plugging into this week's episode. I hope you're able to take a few nuggets away from it to implement into your business. Remember, knowledge without implementation is useless. If you're curious about what we do and how we help painting contractors all over North America, schedule a free business analysis meeting with us at www.elitebusinessadvisors.com. Our entire team of advisors have ran and managed painting companies just like myself and are here to help support you on your journey. We have packages available for contractors at every stage of business, from flying solo and just starting out, all the way to multi-million-dollar businesses. And lastly, if you loved this episode, please leave us a rating and a review. It helps others on the platform find our podcast, and it could be the best blessing that's ever happened to them thanks to you. Thanks for plugging in, and we'll see you back for next week's episode.
Paint Ed podcasts are produced by the Painting Contractors Association and are made possible by members and industry partners. To find out more about the upcoming educational opportunities or for more information about joining the PCA, visit pcapainted.org.